Good morning, starshine. The earth says hello. I know, my goodness, it is not even 9 o'clock yet. Whoa, whoa, whoa. Starlight's here. Hey, what's happening? Poor connection. We paused due to poor connection. Why is there poor connection there? I really don't know. Let's get started. All right. Just getting ready to get started, you guys. All right. Let's see what we got working today. Dutch Master, Cliff, what's happening? Jose, Moreno, ¿qué pasa, amigo? Jonathan, Dutch Master, Jonico, Joe, Will Murray. Will Murray. Okay, Tiffany, Miss Tiffany, how are you? We're getting ready to get started. Droby, I can't even read that name, dude. Okay, Robert, I can't even read that, dude. Don't even know what that one is. Mr. Mustang. All right, Mr. Mustang. 60s, 70s, 80s, or newer? What Mustang we like in there, dude? Come on, gotta know. Are you a real Mustang fan? You know, the muscle car Mustang from the 60s? The crappy pieces of crap from the 70s and 80s? Or are you a square back Mustang fan? Gotta know, gotta know. All right, let's get started. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. Now, in 2008, I created RC. How you doing? In 2008, my 9-year-old daughter jumped up on my lap and said, "Daddy, please teach me what you're doing." So, those may not be the exact same words. She gives me these weird looks nowadays. And Dad, not what I said, but you know what I mean. She was 9 years old. She wanted to trade just like I was trading. So, I had a major challenge. Here's the challenge. Number one, for a 9-year-old, it has to be simple, safe, predictable, consistent, and no way for her to lose. So, that being said, rule number one, never buy something you do not understand. There's 9,664 different companies that you can invest in at any day. Any day, over 9,600 different companies. How do you find the right one? Well, part of the rules, here we go. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable, and then make sure it has weekly options. I want weekly cash flow, so it has to have weekly stock options available. And fifth, rule number 5, make sure the numbers work. We're going to get into that in a little bit. Let me go through the disclaimers first so nobody is surprised. First off, I have no college degrees. Never listen to somebody blindly online. We're all full of I dropped one at RB. Yeah. Come on, that's inappropriate, dude. Don't be doing that. As I was saying, I forget what I was saying. Now, I have ADD. You guys pop up questions. I'm going to stop and look at them. If I get sidetracked, that means you guys stop asking me questions. Let's get on with the stocks, because you guys are here to take a look at stocks, and that's what we're looking for. Hope you're having a great week. So far, it's good. My week is great so far. Now, you guys don't forget to like, share, comment, all those kind of things. For some strange reason, it attracts more people. I don't know. Go figure. Anyway, that being said, what we're looking to do is safe trading. We want to, I'm assuming you guys are here because you're interested in stock trading. You're interested in stock trading and having a safe trading strategy. Well, this was created for a 9-year-old. Now, it averages 1% per week. Now, I'm sure all of you over the age of 18 realize that 1% a week is over 50% per year. 50% per year is awesome. Who do you know that makes 50% per year? Well, I do, but you don't know me. So you're just getting here. All right, that being said, if you really want to talk to me, DM me with your phone number. I will give you a call. Now, it's funny because anywhere between 8 and 20,000 people actually come across this channel every day. That's a lot. But will you imagine out of 8 or 20,000, between 8,000 and 20,000 people, only about 2 people a day actually send me their number and I actually give them a call. All right, Ibram, you want to take a look at Nike? Cool beans. John Watson, how are you today? Do you watch out for VIX before trading? Not at all. I honestly could care less about that. Now, the VIX, you understand that's a volatility index. It tells people, well, how volatile is the market? I really honestly don't care. Because remember rule number 1, never buy something you do not want to hold on to long term. Wait a second, I forgot what he wanted to look at. Nike, N-K-E. Okay, we're going to take a look at Nike. No, I don't pay attention to the VIX because here's the thing. The companies that I'm looking at, most of them have been in business for over 100 years. So if I'm buying a company that's 100 years old, well, what does that have to do with the volatility index? And if the company has dividend, that's the only ones I look at, just to let you know. Companies that have consistently increased their dividends. Now, there's only 2 kinds of companies. Well, actually, there's 3. Private companies, which we can't invest in. Then it breaks down to the other 2. Ones that pay dividends, sharing their profits. And the second one, they take all that profits and they dump it back into the company for capital growth. So if you are here looking for ideas on capital growth, okay, Mills photo, I see that Coca-Cola. Well, I'll write it down. It's not the greatest one in the world. I mean, it's a great company, don't get me wrong. You know, they've been around for over 140 years. But we'll take a look at it in a little bit. What was I saying? I get sidetracked so easy. Hollywood's in the house. Ellie Soundway, what's happening, brother? Jonathan, can you tell us how we can be a member of your 9 a.m.? Well, yeah, Jonathan, that's relatively easy. You go to the website, The 10-Minute Trader. Okay, the link is in my bio. Okay, it's right there. Here's the link right there. As soon as you land on the page, the link is right there. You click on that, and that will take you over to Dividend Stock Talk Patreon, which is where you sign up to be a part of my morning trading group. Now, I do have a bunch of people that do like to trade on a daily basis. Monday, Tuesday, Wednesday, Thursday, 9 a.m. Okay, 9 a.m. We're jumping on. Now, I was on today for over 2 hours because you guys just keep hitting me with questions. No problem. That's what I'm here for. I love helping people. Okay, I'm here. I made a commitment for the whole year to be here every single night. I've only missed 2 days since the beginning of January. 1, I was sick as a dog. 2, I had to take somebody to the emergency room. Okay, so I think that's fair. 2 days. So I'm going to be here for the rest of the year, every single night from 9 p.m. until 11:30, answering all your questions. The 2-hour today was amazing. Paul, thank you, Bob. You learned a lot. Way to go. Thank you very much there, Mr. Paul. Now, for those of you who don't know, I am recording on 7 different cameras, which means 6 different platforms. So just sharing the information. Let's just get into it and let's see how many stocks we can look at tonight to show you how I do this trading strategy. Because remember, it's simple, it's safe, it's predictable, it's consistent, and there's no way to lose if you do it right. Okay? So that being said, the very first one we want to take a look at tonight, I forget who offered it up, but it is Nike. Nike. Okay, so first thing I always want to look at, the high. This is the 1-year chart. Okay? Now charts, you can have any size you want. A 1 week, 1 month, 1 year, 5 years, 10 years, 20 years. I like the 1-year chart. I like the 90-day chart. I like the 30-day chart. And then I like the seasonality chart. We are going to look at every single one as we progress, and I'll tell you why I like them. First and foremost, the main thing I want you to take away from this is, are you ready? Does it make sense? Okay, you may think you may not know anything about the stock market, but it was created for a 9-year-old, my 9-year-old daughter. Let me pull up a video to show you to her. This is my little princess. Okay, oldest. Here she is right here.
Hi, I'm Tracy, and as you being part of my internet website club thingy, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'm trading, and every month you'll be getting
that's my daughter.
stocks that you can choose different stocks every single day. There's a
That's me. Okay, this was 12 years ago when she was 11. Okay, now she's 25. She's actually taller than me nowadays. I jumped in with Dollar General today. Cool. Pending the Friday into dividend, blah, 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 blah. Cool. 1.5%, 1.9%. That's awesome, dude. Way to go. I like Dollar General. Let's take a gander at that in a little bit. Dollar General. DG. So as I was saying, I created this for, you saw her. That was my daughter. Okay. But that was her at age 11. I showed it to her when she was 9. This is after 3 years of trading. You see, behind her is a big old whiteboard. We had to write it down on a big old whiteboard because they didn't have big screens like they have nowadays. And they don't have the technology back then that we have currently. So that being said, this is who I created the strategy for. Simple, safe, predictable, consistent, no way to lose, all that fun stuff. Okay, so we're looking at Nike. First thing I want to see, where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it right now? And which direction is it going? So it's going to the downside. It found the bottom down here. Now it's going back up. Great. I love a bottom because you're only going to make money in the stock market buying low and selling high. I don't like buying high and waiting for it to go higher. Nathan, how do I feel about stocks like TSLY? Nope. CONY? No. Now, if you really, really, really want me to take a look at them, I will take a look at them. Now, when people ask me about those, basically it tells me you don't know how to do research. That's number one. Number two, if you're buying them because somebody told you they're a great stock, they are lying to you. That's just my beliefs. Now, you may not listen to me. You may think I'm full of shit. But just for the fun of it, let's go take a look at TSLY. TSLY. Number one, it's a monthly. Monthly optional stocks means I can only write a covered call once per month. That's 12 times per year. Now, if I said rule number 4 was make sure the company had weekly options. The reason I want weekly options is so that I can trade it every single week. So I can get 1% every single week with a weekly optional stock, not a monthly. Okay, monthly just doesn't work. However, it gets worse. Let's go on over to Yahoo Finance. Okay, and we are going to put in CONY because you seem to think it's a good idea. First and foremost, number one, 2 things I want you to see. See what the yield is? The yield says 129%. That means if you put your money into it, the amount of money they're giving you back, 129%. They're full of shit because look at here. Year-to-date daily total return, negative 3.59. Now, why do I say they're full of shit at 129? Well, let's go over to historical data. Historical data tells us how has this stock been performing over however long it's been in existence. First thing I want to do, I want to go to dividends only, and then I want to go to the maximum amount of dividends they have paid out. So, take a look at that. October 2023, September 2024. Okay, they paid out 12 dividends. That is it, only 1 year. Why are they giving out 125% or 129% for the first year? Because they're trying to attract people like you with big dividends. 1 year of dividends, yeah, hell no. Sorry, I don't do it. But let's take a look at the numbers. 121, 108. Well, that's down. That's not the way we want to go. We want to go up. 246, 269, 108. That's a big drop. That's over a 50% drop. Why would you think that's good? 166, 279, 228, 170. Again, almost, that's a big drop. 157, a big drop. 101, 104. No consistency, no predictability, and they've only paid dividends for 1 year. Now, what they're trying to do is by giving you these big dividends, okay, let's go back to the summary. By giving you the big dividends, okay, 129%. So you put in money, you're getting 129% back. They're trying to suck you in to give you a negative 3.59. Look at year to date daily total return. Negative 3.59. Why do you think that's good? 1 year of dividends, they're trying to suck you in. Okay? They're actually lying to you. 1 year of dividends, no thanks. I don't like it. I don't like being lied to. I don't like being manipulated. Sorry. Now the other one, TSLY. TSLY. Okay? TSLY, basically the exact same thing. Yield 83%. Year-to-date total return, negative 4%. They're giving you big premiums and big dividends to suck you in. Hey, it's Dividend Stock Talk. Jessica, how are you doing today? Let's go look at historical data for TSLY. Okay, TSLY, here we go. Dividends only. And I want to look at all the dividends. Okay. January 2003. So what are they, a year and a half of dividends? Yeah, I don't like either one. They're sucking you in to get your money out of you. Now look, $2, 181, backwards, 180, backwards, 166, backwards, 88, backwards, 161, 213, 166, backwards, 117, backwards, 115, backwards. There's no consistency whatsoever. So why, do you see what the shirt says? What the hell are you thinking? Why would you put your money into a company that has no historical performance? The dividends aren't consistently going up. They're going up, they're going down. Now, I'm retired. I can't take the risk of putting my money into something that's not consistent. Holy shit, 42. We're gonna reboot in a couple of seconds. Hold on. I bought a few for funnies. Doesn't seem like I'm ever going to recover unless I continue down. Sorry, Nathan. Average down. Yep, I heard that. Dividend trap. Exactly, Cliff. I don't like it. We're going to reboot because we're down to 20. That's freaking ridiculous. I mean, down to 40. Okay, let's reboot. Uh-oh. Let's get out of there. Joshua, how are you today? Okay, those are going to end now. Sorry, guys. 40 people ain't going to work. Here we go. Live. And let's try this one more time. For you guys here, we're going to try this one more time. Do you have 7 phones going? 1, 2, 3, 4, 5, 6? No. 6 phones, 7 cameras. Joshua, how you doing? All right, there's that. Here we go. Let's try this one more time. All right, we're going to try this one more time and see what we can come up with. That was just ridiculous. All right, that being said, let's move on to something else. Why they're rebooting. We can take a look at a couple of stocks. TSLY, yeah, no thank you. I'm trying paper trading until I am comfortable with Thinkorswim. Adam, that's a perfect idea. Really, it is. It's wonderful. Good for you. All right, so TSLY. Let's go back to Nike, NKE, Nike, because we didn't get to finish that up. Okay, so here's Nike right here, over this side. Here's the high for Nike for the year. Here's where it was a year ago. Here's where it is now. Look at the direction. She falls down, bounces off this bottom here, going to the upside. Well, currently you're at 89.13. Now, if I like Nike, well, I'm going to be buying it at 83.91. The closest strike price to this is going to be the 84. The 84 is current. That can't be freaking right. The 84 is currently going for $6.25. That can't be right. There must be something going on after hours. So, thank you for that information. I like to be showed what you're looking for when investing. Hey, Nathan, that's what I'm here for. You know what? I'm here because I got tired of being screwed over by the powers that be, the professional traders, the money managers, the market, what do you call them? The fund managers, the banks, the investment bankers, all those people saying, good, give us your money, we'll give you a 4 or 5% rate of return every single year. Yeah, that doesn't work for me. I like 1%. How do you average down on a stock? Hollywood, come on, you know that one. Nathan, join the course, it's worth it. Thank you very much there. So let's take a look. Now, Nike, something has to be going after hours because these numbers are just ridiculous. Okay, 83.91, the 84 is going for $6. Yeah, I want to take a look at that thing first thing in the morning. I'm going to put it in big, huge letters, NKE. Big circle around that. I will actually sell some stuff to pick up some of that if those numbers are correct. I don't think those numbers are correct. Now, first thing in the morning, all these numbers are going to change. Give me a good idea of what's actually going on. All right. That being said, what is this with so few people here? You know, like, comment, subscribe, all that kind of neat stuff. 60 people, that's horrible. I think I might have bad breath or something. I don't know. All right, so that's Nike. A year ago, we were sitting at 95. We topped out at the end of the year. I can't do this. I have to brighten up the screen. Somebody told me the screen was too bright. I can't see squat. Nope, that ain't it. Okay, that ain't it. Display, here we go. Brightness. There we go, that's better. All right, that works for me. Okay. The high of the year was 122.91. The bottom of the year, looks like we have a double bottom at 70.75. Okay, the 24th, and then again on the 5th. Look what just happened recently, the last 30 days. Here we go. Here's the last 30 days for Nike. 30 days ago, we're at 83. Okay? She drops all the way down to 77, shoots up to almost 91, and pulls back a little bit. Currently, wow, that's weird. Currently, we're at 89.13. Well, if we're at 89.13, well, why are we seeing these numbers here? Okay, if we're at 89, why are we seeing 80, 81, 82, 83, all that crap? Those numbers just don't make sense. Okay? Nike's earnings was today. Ah, there you go. Darbenly, way over here, dude. You get around, brother. Now think about Darbenly. You're here. Anyway. Adam, when I sell an option, do I have to wait a full term to close it out? No, you don't. Okay, you can close it out anytime you want. Remember, if you sell something, you have to buy it in order to close it. Anytime you buy anything or sell something in the stock market, you're buying to open or you're selling to open. You're opening a trade, well, you got to close a trade. Same thing. All right, so that's Nike. I like the numbers. It's interesting. I want to check it out first thing in the morning because after hours, that kind of stuff makes things go kind of wonky. Wonky's a good word. Let's use that one. So Darbenly, I think you're the only buddy over here on this channel. So you can ask any questions you want, and you'll be the first and only one over here. Anyway, I've been making 1% on tea every week. Cool beans. Tea, Hollywood. Let's take a look at tea. AT&T. Now, first of all, all right, I wouldn't be buying AT&T. Nike's losing 6% after hours. That's probably what it is, Paul. Thanks. Take a look at AT&T. Well, currently, she's close to the high of the year. Look at the bottom. High, low, where was it? Where is it? What direction it's going? Anyone can tell you the direction of that one. Great. Well, let's look at the numbers. Does it make sense? Well, currently it's at 22.12. The closest one's going to be 22. That's going for 24 cents. However, if we're losing 12 cents right off the top, we're only walking away with 12. It's not going to work. Yeah, see, the numbers don't work here for me. Okay. I got to record something today because I haven't recorded anything over there for a while. Mr. Lou, how are you? Matthew Hawken, how are you doing today? Fish gut. Fish guck. Seabiscuit. Oh, you ever see that movie Seabiscuit? DG. Well, let's take a look at Dollar General. Someone just threw that one up over here on YouTube, so let's take a look. Dollar General. Now, I'm pretty sure J. Entertain just joined in. Are you referring to options? Yes, I am. Is Nestle a good stock? You actually got to give me the ticker symbol. Be honest with you, I have never traded Nestle, and there's probably a reason for that. Work tomorrow. Have a wonderful night. Way to go, brother. All right, so Dollar General. First thing I always want to take a look at. Where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it currently? Look at this big drop right here. That drop I want to take a close look at. So we're going to zoom into that. But before we do, okay, let's take a look at the numbers. Currently we're at 84.60. So the 85 is going to be the closest one. And the 85, that's 1%. I like 1%. 1% is great. NSRGY. Mr. Steele, your things too. Okay. Have you covered the S&P yet? I don't do the S&P, sorry. I'm looking to roll out and in on MU. Oh, I like rolling out. I would have to know a lot more details before I give you information on anything on MU. Only because I have no idea what you jumped in at. I have no idea what your current position is. So there's a lot of things I don't know, so I really can't tell you. So Mr. Steele, your things. Let's take a look. We're going to take a look at that after we finish up with Dollar General. All right, Dollar General. High, low, was, is, all that kind of nice stuff. The 84.60, the 85 is going for 86 cents. That is more than 1%. Here, love the analysis. Are you concerned about owning stocks in October with the chance of the stock drop? Absolutely not. Texan Bull, nice to see you back again. The reason I'm not worried about it, because here's the thing. I'm interested in the dividend increases. Hold that second. Someone rolls, does that mean that the stock is higher than what they... See, Adam, I'm not 100% sure. People roll for different reasons. Now, I rolled a couple of stocks this week to gain more time, not stock price. Octa is when you want to vault stocks. I'm not quite sure what you mean vault stocks, port closing. Yeah, I know the ports are closing. But here's the funny thing about all this. You guys are telling me all this information that I already know. However, you're missing the big picture. Stock market has been around for over 400 years. Most of these companies that we are looking at have been in business for close to 100 years. So what has happened in the last 100 years? World War I, World War II, Korea, Vietnam, all those wars over in the East. What else? The stock market crash in 29, the Great Depression, the oil embargo of the 70s, the dot-com bust in the 2000s, the Y2K crap. What else? Something else happened in the 2000s. Oh, the financial crisis of 08, the world shutting down in 2021. Yet, all these companies are still increasing their dividends. Explain that to me. Explain to me what's happening in the economy right now, in the world right now. How is that going to affect companies that have been around for 100 years? No matter what happens, I cannot conceive a world where there is no more Coca-Cola. They have been around for 140 years. Bank of America, over 100 years. Ford, General Motors, both over 100 years. Okay? Wells Fargo, over 100 years. AT&T, over 100 years. Give me a second. Oh, it's an electric company that's been around. Roll time. Yeah. All right, Milton, you're going to have to give me better answers than that one. Consolidated Edison, 200 years they've been in business. Do you honestly think a company that has been in business for 200 years and still is paying dividends, you think they're worried about what's happening in the economy? No. Because no matter what happens, you're still going to need electricity. You're still going to need water. You're still going to need gas. You're still going to need oil. You're still going to need toothbrushes, toothpaste, hairbrushes. You're still going to need certain things in life. So no matter what happens, so who really cares? Now, this is going to be really strange, really out there, but listen closely. Does the price really matter? Okay, the high price 170, currently down to 80. Well, that's a huge difference. That's a $90 difference. Now, if you bought the stock at 170, you're going to collect the dividend, whatever the dividend is. Now, if you bought it at 80, well, you're going to collect the exact same dividend. If the company is profitable, they're going to give you a dividend. What do you think about the porch closing? You mean the port? The big difference between a port and a porch. I got a porch and it's not closed. But the port, here's the thing when the ports are going to close. Yep, they want more money. Everybody wants more money. It's just one of those things. However, if the ports close, depending on how long they're closed for, we're not going to be affected anytime soon, because by the time it gets to the port, it has to go in, it has to go for clearance, it has to go into a truck, it has to be shipped to where it's got to go. From where it goes from there, then it's got to go to your local store, then it's got to go to you. Well, that's about a month or so down the line. Well, you're talking November. Okay, then we're going to know who's going to be president after the port thing actually is an issue. Okay? Now, Lee, what do you mean by buy vault stocks? I have no idea what that means. Love the answer, blah, 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 blah. Hold on a second. I haven't heard about a port closing. I'm in Kansas. I haven't heard much. Adam, on the eastern seaboard, you have major ports where shipping comes in and they get products they import all over the world. Well, here's a great idea. Stop buying shit from overseas. Why don't you buy American stuff? There you go. What a great concept. Stop buying crap coming in the ports. Just stop. Okay? We have lots of stuff that's here made in America. Why are you looking at stuff that's being shipped in? To hell with that crap. Anyway, that's just my opinion. What the hell do I know? All right. Texan, love the analysis. Are you concerned about owning these stocks with the chance of the stock drop? Not at all. Yeah, buddy, American made. Thank you there, Adam. I mean, granted, okay, this is our mess. We should clean it up. We should keep our money here. We shouldn't worry about stuff coming in from China, coming in from Afghanistan, coming in from Africa, coming in from wherever the hell it's coming in from. Just buy American shit. Support your brothers and sisters, your aunts and uncles, your neighbors, the people down the street. Support those people. Anyway, don't get me started, all right? We're looking at Dollar General. Let's finish up Dollar General. Okay, the high, the low, it is. Okay, so anyway, back to, do I care about the price dropping? No, I don't. Because no matter what happens, the stock goes up, stock goes down, the price value. If I own a portion of the company, whether I own 1,000 shares, 10,000 shares, 500 shares, I own a part of that company. I'm not going to invest in a company that is susceptible to shutting down. I really can't see we Americans not having our Coca-Cola anymore, our Pepsi, okay, our Budweiser, our Coors, our barbecues, our whatever it is that we like to do as Americans. You really think we're going to give it up just because there's a few issues? No, we're going to continue. I remember during the financial crisis, everybody was panicking. Stocks dropped 60 to 80%. Okay. But there are still long lines at McDonald's, still long lines at Cracker Barrel, still long lines at Walmart. Okay? Anyway, let's just stay on topic. All right? So, here's the high, here's the low, all that kind of nice, neat stuff. Currently at 84.60. If I do the 85s, I'm going to get 86 cents, which is more than 1%. But here's the thing. If she ends up above 85, I'm also going to get the difference between 85 and 84.60. That's another 40 cents. You add another 40 cents onto it. Well, I'm walking away with $1.26. Well, $1.26 on an $85 stock. Well, that's a nice rate of return. Okay? Well over 1%. I like Dollar General. Let's zoom into the last 30 days because that's my main concern. My main concern is the last 30 days. It gives me an idea where I think the stock is going to be by Friday or by next Friday. Because stocks go up, stocks go down, and then they go up, and then they go down. If you think a stock is going to come to your house and wash your dishes and water the lawn and trim the hedges, yeah, you're sadly mistaken. They go up, they go down, that's all they do. All right. So 30 days ago, we're at 83. We bottomed out at 78, jumped up to 88, now we're coming down. Would I buy Dollar General this week? No, I would not. Okay, I would wait about another week for it to come all the way down and turn around before I jumped in. I like Dollar General. I follow it. I like seeing it every single week. Well, I do all my buying on Monday and Tuesday. So if she's at a high on Friday, Monday she pulled back, today she pulled back, that's what you call profit taking. Because it's not a profit until you take it. EX date dividend is Friday. Cool. And I don't like buying stocks on the dividend dates, and on the dividend weeks. All right, let's go. We got a bunch of more questions to look at. Ports closing. Yep, got that. What software is that, DG? Too pricey for me. Yeah, I saw that one. Okay, Mr. Steal Your Things. NSRGY. Never heard of it. NSRGY. NSRGY. No options. That means it's going to be a no. Sorry. What software is that? Dog, it's not a software. That is actually a trading platform. This is where I buy and sell my stocks from. It happens to be called Think or Swim. You can download it for free, okay? However, you can use it for a couple of months for free, but you really got to call Charles Schwab and coerce them to let you use it, because they do want you to put your money into Charles Schwab so you can trade with Charles Schwab. I like this. I've been using this for over 20 years, only because it has everything on it that I want. All right, Think or Swim. What do you think about ports closing? Don't really care. I know it's weird. October is when you built. Okay, ports closing. Got that. Iran calls. I have no idea. I have nothing to do with Iran. Can't figure it out. Mom boss. That's funny. She's laughing about something. Perfect timing, right? Hence the Declaration of Independence. Oh my goodness. Okay, I wish I was in that conversation. All right, I love the Declaration of Independence. I love talking about American history. I like America. I do. All right, NLY, no. AGNC, yes. ORC, no. What are your thoughts on these REITs? Well, NLY is a no. ORC, I'm not very familiar with ORC. Orchard, that's a monthly. It's going to be a no. Now, AGNC is on my list. Okay, it is a weekly optional stock. Now, when I tell people I only like optional stocks that are weeklies, okay, that are weeklies every week, because I want weekly cash flow. I want a consistent flow coming. I was born in the 60s. I grew up in the 70s, 80s, okay? I went to work at 8 o'clock in the morning on Monday. On Friday at 4:30, 5 o'clock, that's when we got our paycheck and we went home. That's what I grew up with. That's what I understand. This trading strategy, I do all my trades on Monday. On Friday, well, I get out of all my trades and then I do have a nice weekend and I do it all over again on Monday. Do you think that is a good risk management if you risk 300 per trade? The capital is 15,000. I'm calling from Spain. Is that really from Spain? Hold on a second. You are calling from Spain. 300 per trade on a capital of 15,000. David, first of all, thank you for tuning in. Second of all, now, personally, I can't tell you what to do. I could, but I'm not going to, because if I tell you what to do, you're not going to learn anything. Okay, I always tell people, don't listen to a damn word I say, do your own research. But you're here, you're asking questions, great. I only do facts. You give me the information, I actually give you the numbers that I'm actually seeing, and I give you my interpretation. I have a trading strategy that I give away for free. It's simple, safe, predictable, all that kind of nice, neat, fun stuff. But I don't tell people what to do. However, if you got $15,000 and you're just starting out, first of all, you shouldn't trade any money until you understand what you're doing. I always tell people, download a trading platform. This one you can download for free. You can use it for free for a short period of time because they would like you to put your money there, so they allow you to use it. Now, everything I need is on this trading platform. I don't get compensated if you do it. Really, I don't. Okay? I just use it because I like it, because I have not found. Now, I've been trading for over 20 years. 15 years ago, I looked at like 30 or 40 different trading platforms. I wrote a book about it, which ones I like, comparing them. This is the one that I like the best because it has everything I'm looking for. Now, you should paper trade for a while. Paper trading is kind of like playing Monopoly. You know, Boardwalk, Park Place, go to jail, don't collect $200, you know, that kind of thing. Same thing. You buy the stocks, it's pretend money, you don't lose anything, but you do gain valuable information. Okay? So you practice, practice, practice. If it makes sense, great. Then never put all your money in the same place. So if you get $15,000 and you divide that up, let's say 5 different positions, so that's $3,000 per position. Okay, Sincaz, how are you today? Okay, you divide it up and then you find a stock that makes sense to you. And if it works, great. Well, just keep on practicing. I'm here every single night. Just keep on coming back, keep asking questions, and I'll see what the best I can possibly do. Okay, that's about all I can offer you. But practice, practice, practice. When you get good at it, you will know when it's time for you to put real money in. All right, so let's keep going. Okay, so we're looking at AGNC now. First thing I always want to see, high, low, where was it, where is it, and what direction? Look at that. I lost 80 grand for not having risk management. I have win rate, but loss, ooh, I lost, I lose a lot, yeah. Okay, so David, sorry about that. Now I said this strategy was created for a 9-year-old. It had to be simple, safe, predictable, consistent, and no way to lose. That's the big one, no way to lose. And it's 5 simple rules. Rule number 1, never buy something you do not understand. Buy it as if you're going to buy it and hold on to it forever. That's the main intention. Not what I want to do. I buy it as if I'm going to hold on to it. And then I sell a weekly option. Weekly, so I can get weekly cash flow. So if the stock drops down, I can still have something coming in until it hits my target. So if I buy this one at $10.30 and she drops down to 9, 8, 7, I'm not going to sell it at a loss. I'm going to keep it, and I'm going to keep getting that dividend every 90 days, but also I'm going to collect whatever premium I can on a weekly basis. Okay? Now, I don't really like this one because it has crappy premiums. Okay, when I say crappy premiums, look, 1 strike out of the money, 0. 2 strikes out of the money, 0. Okay, I don't like this one. Not enough premiums in there. But if you really like AGNC, fine. I don't, because the premiums aren't that great. There are lots of companies out there that are better and give better premiums. So never sell at a loss. Remember the 5 rules? Never buy something you don't understand. Never sell at a loss. Make sure the company is consistently profitable. Exactly. If the stock drops, the option will just expire worthless. 80% of all options expire worthless. That's why I don't buy options. I want to be an option seller. I like stacking the odds and probabilities in my favor, not against me. If you buy an option, well, you're 20% chance that you're going to make money. If you sell an option, 80% chance you're going to make money. You figure out which end you want to be on. Now, granted, you can make more by buying than you can selling, but I like consistency and predictability. I'm not looking for big, huge gains. I'm looking for 1% a week. 1% a week is 50% per year. You tell me who else gets 50% per year consistently. All right. Let's continue. I've tried buying jeans made in the US. It's not always easy. Okay, I'm not quite sure what you mean by that. I always thought Levi Strauss was made in the United States. When a stock drops and you're not assigned, do you ever sell calls below your cost basis? Absolutely you do, but you got to be really careful. I like to go 4 to 5 strikes out of the money. Buy SBCE, yeah, no thank you, at $200 because it goes, yeah, no, sorry. It doesn't have 20 years of increased dividends. It's going to be a no for me. JMIA. Never heard of them, David. I would invest in something I've never heard of. Okay? Now, remember rule number 1? Never buy something you don't understand. Never heard of that company. Why would I buy it? Okay, I like companies like Consolidated Edison, General Electric, IBM, AT&T, Home Depot, Lowe's, Procter & Gamble, Colgate-Palmolive, Clorox, John Deere, American Express, Visa, MasterCard, Discover, companies that everybody's heard of. Great. I get a 1% per week. I really don't care. I'm not looking for capital appreciation. I'm looking for cash flow. So if you're here waiting and looking for something that's going to give you an edge to make a lot of money, this ain't the place for you. Just dividends. Not really dividends. I'm looking for premiums. Premiums are usually always bigger than the dividend. Thanks, much appreciated. Okay, let me show you something really quick. All right, let's take a look at JP Morgan. All right, JP Morgan. See it right over here? The 4th of November. Okay, a couple of days after the election. The 4th of November. All right, is the dividend. It's $1.25. Now, just for the fun of it, let's take a look at JP Morgan. JPM. Okay? Now, currently, JP Morgan is $206. All right, the closest strike price is going to be the 205. Well, the 205 is selling for 284. If it's selling for 284, why would I want to collect the dividend if it is only 125? Think about it. If I buy the stock and collect the dividend, great, I'm getting $1.25. But if I buy the stock and sell it to somebody else for the exact same price I just paid for it, okay, well then I'm getting 280 or 250. So what is the choose? What if you choose a further strike price? That works. I like the 5 to 4 strikes out of the money. Milton, I agree with you too. It's always about the money. It's always about the numbers. Okay, if my stock drops and I sell a option less than what I paid for it, strike price less than what I paid for it, well, I want to make sure it's not going to hit it. I want to make sure it's 4 to 5 strikes out, so I'm getting some cash flow coming in. All right. So fake name, I have no idea why you're having problem buying jeans made in the United States. Levi Strauss has been in business since the 1800s, over 100 years. Levi Strauss, over 100 years, and they're still making blue jeans. Okay, if you're buying something from out of the country, I can't help you out. Okay, if you're having an issue finding Levi's, well, go online. I want to buy some Levi's. It's really not that difficult. What do I think about Siri? Siri just merged recently and did a reverse split. Let's take a look at it. Siri, S-I-R-I. Okay, so first thing I always want to see was the high, the low, where was it, where is it, what direction is it going? Any thoughts on SoFi? Yeah, no, I don't like SoFi. Check the numbers. Go look at a website that gives you the actual, like this, the actual factual numbers. I put all on, and yeah, good for you. I don't do that. Okay. All right, so Siri is in a downtrend at the moment. Here's the bottom right here. I want to take a close look at it and find out if it's going to make sense for me. However, at this moment in time, 22.69. The 2250s are going for 34 cents. Not quite, because see, I'm losing 19 cents if I sell at 22.50. If I buy at 22.69, I sell at 22.50, I'm going to be losing 19 cents. You take 19 cents off of that, then no longer 1%. Now, look at it this way. Today's Tuesday. Tomorrow's Wednesday. We have 3 days left to the week. The premiums really aren't going to be that great. So let's take a look at next week's premiums. So next week's premiums on Siri, the 2250s. No, oh, wrong one. Wrong one. Here we go, 2250s. The 2250s for next week, 71 cents. Well, that's over 2%. That works for me. Let's take a look at the numbers, see what it looks like, and see if it makes sense. What apps do I download to learn how to paper trade? Nothing. If you like a stock, hit the buy. That's it. Hold on. Just sit, chill. Do the premiums change daily? The premiums change every 5 seconds. During the day when the market is open, these numbers change every 5 to 10 seconds. Okay? It's like a roulette wheel, spinning round and round and round and round and round. You throw a dart at it, that's your price. Same thing. All right, anyway. A year ago, Series at 44.28, tops out at 57.72 just before the end of the year. Okay, last 30 days. Okay, looks what happened in the last 30 days with Siri. Here's a high right here at 33. Well, now we're down to 22.66. That's the bottom of the year. Okay, I like Siri. I'm going to keep my eye on it. I'm not going to buy it this week. I'm going to wait for it to turn around. Made 100% return on DVN. Cool beans. Was a good day. Way to go, Big Pasta. No, awesome. Okay, so take a look where we are. A new 30-day bottom today. Don't get me wrong, I love a bottom, but I'm not going to buy it at the bottom because it might go lower tomorrow. It might go lower the day after that. I want it 2 days to the upside. 2 days to the upside. So tomorrow, if she goes up, great. I'm not going to jump in. I want 2 days to the upside. What do the blue bars mean? The blue bars, that's the volume. That's how many shares are being traded. Down here, not much volume. Over here, huge amount of volume. Okay, see how high the stock is here? Not many people buying or selling. Okay, when the stock drops down to here, well, then a whole bunch of people are buying. Okay, it's always different. Okay, so I'm going to keep my eye on Siri for next week. I'm going to actually write that down. All right, Siri for next week. Okay, because my assumption, tomorrow's Wednesday, so if tomorrow she starts turning around, I want 2 days to the upside. Well, Wednesday, then it's Thursday and Friday, so it'll be perfect for Monday if she turns around. Okay, U.S. corps don't support Americans. The increased price to pad their pockets for more mansions, yachts, etc. Hey, Mom Boss, I'm going to agree with you, okay? But you're here, okay, and you're looking to profit off of companies. So you're just as much to blame as I am. We're looking to make profit. When you put the time, can you show me the apps you use to trade? Well, there really aren't any apps I use to trade. The only thing I use is Thinkorswim because it has everything in here that I want. First, are you able to see what does the average 10 years on the same chart? Why do I want to see that? Okay, I honestly, see, I'm not buying to hold for a long period of time. I'm buying on a Monday, hoping to be out on a Friday. And on Monday, out on Friday. I really honestly don't care what it did 10 years ago. I care about what it did last week and the week before. And then, let me show you chart number 5. I haven't shown you this one yet. Chart number 5 is called the seasonality chart. Okay, a seasonality chart, this might be what you're looking for. Okay, the seasonality chart to the far left is January 1st. The far right is December 31st. It's a whole year. The blue line represents how the stock has moved this year. This blue dot right here, well, that's today. Okay, all the way over there, that's January 2nd. January 2nd to today. Yeah, seasonality. Okay, so that's the blue line. The red line represents 10 years worth of data. That's 2014, 2015, 16, 17, 18, 19, 20, so on and so forth for 10 years. And this is the average movement. So if this is today right here, well, what does the stock usually do? And this is not guaranteed. This is how the stock usually moves throughout the year. So if we click here on the blue dot, click left, drag right, that gives me an idea what it's going to do for the next 2-3 weeks. Well, here we are, way over here. Okay, basically, it's very slight tilt to the upside. That's a big question, Milton. Milton, I had to close trades because the stock went parabolic. I have no idea what that means. Okay, is that up, down, sideways? I have no clue. The overall position gain was 2 times the premium received. Has it happened to you before? Yes, it has. Okay, they call that going up in value. Okay, so someone got to take that. Now, you could have, hypothetically, my hair's a mess, you could have hypothetically rolled forward. Okay, if you roll that trade forward, you buy yourself some more time. That way that's not called away from you. Okay, that's one of the privileges that some of these people learn when they're in the morning trading group, because we actually can see the trades right then and there. I can't show you anything now because the market's not open. So let's go back over here. Let's get out of there. Let's go back to here. Okay, so Siri, we already figured out Siri. Let's go through some of these questions. Slob, oh my God, slob on my knob. That's funny. What is your rebuttal to the original finance theories? Uh-oh. I just missed it. Where did it go? All right, slob on the knob. You're welcome there, Milton. What is your rebuttal to the original finance theories that we shouldn't care about dividends? What's my rebuttal? You shouldn't care. Yeah, I don't tell people what to do. There's my rebuttal. I don't tell people what to do. Now, a dividend is nothing more, nothing less than a company sharing their profits. Okay, so you have 2 different companies. One will share the profits with dividends. Okay, they take the profits and they share it with the investors. Those are the only companies I like. The other companies take all their profits and put it back into the company for capital growth. You need to ask yourself the question, what am I looking for? Are you looking for capital growth? Are you looking to hold on to your wealth? Are you looking for cash flow? Okay, depending on what it is you're looking for, why are you doing this in the first place? If you're looking for cash flow, well, great. Well, then dividends are important because they're taking the profits and they're paying it to you. And if the dividends consistently increase, well, logic, reason, and common sense saying, well, if the profits are increasing, the ones that they share with me, well, they must be doing something right. Now, if you have a company, let's say GPC, Genuine Parts Corporation, they've been increasing their dividends for over 7 decades. I'm not even 70 years old, and this company is consistently, every single year, higher and higher and higher dividends. It's up to you what you want to do with your money. So we shouldn't care about dividends? Well, you're listening to the wrong person. Well, especially not the person that I would listen to. Okay, I like cash flow. I really do. Yesterday, you were interested in USB. After the drop, you liked it more or less. Ooh, the Texan Bull. Now, nobody told me. I was supposed to look at that this morning. We didn't take a look at it, so let's take a look at it right now. USB. Because I remember that. USB. US Bank Corp. No, that wasn't that one because they didn't have a big drop yesterday. Okay? Last 30 days for US Bank Corp. Here we go. 30 days ago, we're at the 30-day high. What is that, 47.50? Takes 2 weeks to drop to the bottom to 43. She shoots up to 46.50, drops down again, back up, back down. She's in a downward trend. Yeah, no. Okay, I don't know what you're talking about because there's no big drop yesterday. Yesterday was an uptrend. Okay, yesterday was a little bit higher. Okay, what going on with Walgreens? Jason, I haven't taken a look at Walgreens. Let's take a look. WBA. Now, WBA is getting a lot of crap, a lot of flack. The reason being, Walgreens is getting a lot of flack. They have 8,700 stores worldwide. Current administration doesn't want to prosecute crime, making it perfectly legal for people to walk in, steal some shit, and walk out. If there's no repercussions for theft, well, you're going to have crime run rampant, and that's exactly what's happening. So Walgreens has stepped back and said, hold on, if this is what you're going to do, we're going to cut 25% of our stores. There's 8,700 different stores. Walgreens has been in business for over 170 years. 170. 170 years Walgreens has been around. 8,700 stores worldwide. Now, Walgreens just so happens to own a cosmetic line that is in 22 stores nationwide. I didn't know that. Walgreens owns a lot of stuff. So it's not just Walgreens the pharmacy, Walgreens the store. There's a lot more going on behind the scenes. And it's going to continue to drop until they cut all the fat. They stop the bleed and they go concentrate on going online and they concentrate on only the stores that are profitable. Think about it. If you have a bunch of stores and you have 2 or 3 or 4 of them or even a dozen of them that are negative and keep losing money, Florida just increased the penalty for shoplifting. Cool beans. Okay? Don't get me wrong, and I'm not condoning this, but I like the medieval times and the Muslims' way of looking at theft. You get caught stealing, they cut your hand off. How many people do you have to see walking around with one hand before you think twice about stealing something? Think about it. I feel bad for those people. Number one, they should be stealing in the first place. Okay? Now, you get caught, you pay the consequences. Here, there aren't any consequences. You don't even get a slap on the wrist. You get a minor inconvenience. Let's keep on going. Oh, so wait a minute. So we're still on Walgreens. So here we are, the last 30 days for Walgreens. Right here. Now, I do own a bunch of Walgreens. Reason being is I love buying at a bottom and waiting for it to go up. Now, I'm consistently getting 1 to 2% every single week on Walgreens. I happen to own it at this moment at 12, and it's currently at 8. I like those times too. Don't get me wrong, I don't like the times. I just like the let the punishment fit the crime scenario. Okay, if you steal something, you get your head cut off. Okay, women that cheat on their husbands, they get beheaded. Kind of dissuades people from doing that kind of shit. It's it's gruesome, it's archaic, it's medieval, but it works. I come from a time frame. If it works, don't fix it. Now, if you like your neighbor and your neighbor says, hey, honey, come on over. I say, hell no, I don't want to lose my head for that. Okay? If you see 3 or 4 guys walking down the street with just one hand, you ask, hey bro, what happened? I got caught stealing. Anyway, let's keep on going. All right, so Walgreens. I do own Walgreens at 12. Currently, it is at 8.73. Now, I did sell the 9s. Yes, I know. It's sad that it works. I mean, should we really go back to that? Well, maybe we should. How long would it take? Think about it. How long would it take if there was capital punishment? You get caught stealing, cut your hand off. Okay, you burn someone's house down, let's barbecue your hands or do something to that effect. Okay, you kill someone, not even a question. I like the way the Chinese did it. Okay, think about it. Okay, you get caught doing a crime in China, you get put to death. They put a bullet in your head, they take the shell and they send the shell to the family and they send them a bill. How long do you think it's going to take before people say, shit, I ain't going to do that? Come on, there's way too many people in the world to let. Anyway, let's keep on going. So currently, I'm into it at 12. I sold the 9s. Okay, it's down to 8.73. If it keeps on dropping, well, the 9 that I sold is going to expire worthless, and I'll do it again next week. I'm looking for cash flow. Really don't care. Barbecue them. Try that in the Republic of Panama. Don't play that. Okay, yeah, you get caught with drugs in certain countries, put to death. They don't play that shit. Okay, think about it. You get caught with drugs here in the United States? Well, if you're the president's son, you get away with it. Anyway. So that's what I think of Walgreens. I have no intention of selling my Walgreens. I'm going to keep hold of it because you make your money when you buy low and then you sell high. Okay, I don't buy high and wait for it to go higher. But Clip and GOVT got 80% of my portfolio. Roasted coyote, cool beans. I don't do either one of those. Okay, I like safe, predictable trades. Great advice like that. What do you think about fade trading? Never heard of it. Hottest topic like that. Thoughts on TFM? Never heard of that one either. TFM, what the heck is that? TFM. Fresh market has no options. It's going to be a no. Don't be calling me that. That ain't funny. Nice job, master. Yeah. No thanks. TJX. Okay. TJX has some weekly options. Okay. Currently move. Here's the high. Here's the low. Here's where it was. Here's where it is. Here's the direction it's going at 116.62. Closer one's going to be 117. That's going to be a no. What's next week look like? So it's a no for this week. Next week, it's 135. Well, that's over 1%. Let's go and take a look at what it looks like. A year ago, we were at 88.82. We dropped all the way down to 86.79, and that was in November of last year. Okay, from there, she shoots all the way up, and here you got a double high right here, 121.16. Okay. Now, she pulled back from that, but let's look at the last 30 days. Okay, here's the last 30 days, and then you let me know what you think. 30 days ago, we're at 117.50. We dropped down to 115.50. That's the bottom of the 30-day period. From there, from a 30-day bottom to a 30-day high, yep, yeah, you're going to have profit taking. Okay, now we have a new bottom here. I'm looking for this thing to have 2 more days to the upside before I jump in. I don't like that gap. I'm not seeing the gap, what you're talking about. If you're talking about the gap from a couple of weeks ago, if you're talking about this gap right here, well, I love that gap. The reason why I love that gap is because gaps have a tendency to fill, okay? Which means from here to here, more than likely it's going to fill and it's going to come down. Yeah, okay, Milton, it's going to come down, and when it comes down, it's going to turn around and go back up again. That's what I'm looking for. I will take an eye on, I keep my eye on this one. I'm going to say about next week, we'll take a look at it again. TJX. Now, we'll take a look at that in a little bit. Texan Bull, TMF. What the heck is TMF? TMF. Okay, interesting. Direxia shares 20-year Treasury bull. Okay, interesting. It has weekly options, but let's see how well they actually pay their dividends. Okay, that's what I'm looking for. How consistent is TMF with paying their dividends? You've got to be kidding me. Dude, seriously? 2022, 2023, 2024, it's only 3 years. Okay, you want to invest your money in a company that only has 3 years worth of data? Okay, the first dividend, 47, 35, that's going backwards. 48, 50, a buck, 32. That cuts it by 60%. What are you, shitting me? 44, 44. Yeah, hell no. When I say 20 years of increased dividends, okay, you can put your money anywhere you want. Me personally, I like a company that's consistently profitable. Now, this may be a good company eventually, but right now it's only 3 years old. 1 out of 10 companies will make it past 5 years. 1 out of 100 will make it to 10 years. So here, yeah, no, still an infant. Not interested at all. Sorry. All right, TJX. Hawaii 311. I got my master's in trading at Bates College. No idea what it means, but anytime anybody say Bates, I always think of Kathy Bates or the Bates Motel. Tasha, how are you today? Thoughts on the ports and how it will affect stocks? Well, I'm thinking. Think here for a second, Tasha. The ports. What are the ports doing? They're importing stuff from overseas. Here's a thought, Tasha. Stop buying crap from out of the United States. Buy American. There you go. It won't affect you a bit. Buy all American shit. It won't affect you a bit. Should I buy Boeing? Uh-oh. BA. Boeing. Okay. High, low. Where was it? Where is it? What direction is it going? It's actually at a new bottom of the year today. Well, if you like Boeing, fine. Now, Boeing is at the bottom of the year. Take a look at this. Actually, it is the bottom of the year. So, for me, I would like to keep my eye on it to see what happens tomorrow, the next day, and the next day. I love buying at a bottom of the year because you ain't going to get any lower than the bottom of the year. Now, I don't buy at the bottom. I wait for 2 to 3 days to the upside because you're going to get to a bottom and then you can turn around and go back up. That's all stocks do. See? Up, down, up, down, up, down, up, down, up, down, up, down. Yeah. I'd wait for it to stop and turn back up. Okay? So I'm going to put Boeing for next week. We'll take a look at it again. Boeing for next week. Marvin, what's your opinion on Apple? My opinion on Apple. Okay, right there, Marvin. My opinion on Apple. Now, Apple, believe it or not, is not on my list. Simone, how are you tonight, Miss Simone? Apple. High, low. Where was it? Where is it? What direction is it going? It's currently at 226.21. Okay, so here's a tip. Okay, I give this tip out every time I see it. You ready? Now, the last traded price today, or the close of the day today, was $226.21. Okay, it dropped $6.79. It says right there the net change. The bid, $225.62. That's lower. The ask, $225.72. That's lower. When you see both the bid and the ask lower than the last traded price or the close, the market maker is going to push it down. Okay? However, yeah, last 30 days. Okay, 30 days ago, here we are, 230. drops all the way down to 214. There's a gap here, a gap here. Okay, she shoots up, 233, comes back down, shoots up. Yep, she's coming down to fill this space right here. That's the way it looks. Is that guaranteed? Nope, it's not guaranteed at all. But it looks that way. All right, the market maker is pushing it down. We already see this over here with the decreased numbers. The chart is telling us down, up, down, up, down, up, down. That's what it's showing us. Is it guaranteed? No, it's not guaranteed. But what? Take a look at this. This you're going to like. Whoops, wrong direction. This you're going to like. The seasonality chart for Apple. Okay, you can't mistake that. Look at January 1st to December 31st. Nothing but up from January to December. Buy it in January, sell it in December. Every year, last 10 years, it goes up. Great. Well, here's where we are right now. What's it going to do for the next couple of weeks? Well, it's going to go up. That's what it usually does. However, that's seasonality. That's what it usually does. Currently, right now, it's coming down. Okay? I will write Apple down for 2 weeks because we'll take a look at it again in 2 weeks. AAPL. Apple. We'll take a look at it in 2 weeks. That's a no, never heard of Boeing. I've heard of Boeing. Okay, is that Thinkorswim gray? Yes, it is. Tony Hawkish, thank you very much. Or Bears, there you go. I'm at 12.2, but weekly options are cheap. Not necessarily so. Now, I'm assuming you're talking about Walgreens. Okay, so let's go back to Walgreens for a second. WBA. Here we go. Now, currently WBA, Walgreens, is $8.70 and falling. Now, you're in it at 12. Great, I'm in it at 12. Look at what the 9's going for next week. The 9 for next week is going for 21 cents a share. Now, we both have it at 12, 21 cents a share on a $12 stock. Well, that's more than 1.5%. That works for me. So if I sell the if I sell the 9 for next week, I just got to keep my eye on it and make sure it doesn't go over 9. And if it does go over 9, well, I have a couple of choices. One, I can buy the option back, okay, and I can sell the 10s or sell the 11s, or I can roll it forward a week. Because what's going to happen? Well, what's going to happen is basically what always happens, okay? The stock goes down, the stock goes up. The stock goes down, the stock goes up. The stock goes down, the stock goes up. That's all it does. So if you play your game slowly, okay, she went 9.30, okay, I sold the 9, so I was at a risk, so I rolled it forward. She's pulling back below 9, so now I'm safe, okay? And if she goes down to about, she'll probably get down to probably 8.3 or 8.2 before she turns around and goes back up again. But it's always a time factor and a money factor. How much is it costing me? How much am I making? Where's my risk? Where's my reward? How do I keep from losing? Okay? Now, I always take it and move it out. Because as you roll forward, you buy back this week's option and you sell a next week's option. And you can play with the numbers to see what works best. Okay? Now, I got 37. I rolled it forward last week. See, I had 12. I sold the 9s. I rolled it forward and got 37 cents. Okay, I rolled it to 11 October, which is next Friday. Not this Friday, because I rolled it forward this week to next Friday, and I got 37 cents. Now, 37 cents on a $12 stock, well, that's 3%. So you can't tell me that the options are cheap. All right, Dino? Demo? Is it Demo or Dymo? I have no idea. Thinkorswim. Good evening, all. 86 is here. Woohoo! Baba and SMIC. Mofish. All right. Alibaba. BABA. Yep, hell no. Okay? It's at the high of the year. Hell no. Okay? And that looks like 3 weeks before that will be a good opportunity. Put We'll put Alibaba down for 3 weeks. 3 weeks, Sony and Alibaba. All righty. All right, next on the list, SMIC. What the heck is SMIC? SMIC. Yeah, hell no. No options. No, thank you. We don't buy the high. Nope. Oh, Demo wants to take a look at Humana. HUM. Big drop. Ooh, check that out. High and low. Where was it? Where is it? What direction is it going? Uh-oh, big question. At the cross scriptures. I know you've never heard of Cleveland Clinic. Yep, you talked about this last week. But can you look at the stock to see will it be a good investment? I don't know what type for Cleveland Clinic. Does anybody in the audience know the ticker symbol for Cleveland Clinic? No? Okay. All right, how's this for an idea? How about we go to Google? Google knows everything. Cleveland Clinic. $1921, that's 100 years. Stock symbol, here we go. Cleveland Clinic, CLF. Whoa, CLF. I've traded CLF before. CLF. Okay, Cleveland Clinic. Okay, here we go. Cleveland Clinic, CLF. No, CCJ is not it. Wait a minute, Cleveland Cliffs. What was that? Okay, let me see what that was. CCJ. CCJ. Nope, that ain't it. That ain't it either. It says Cleveland Clinic. Okay, Cleveland Clinic stock symbol, CLF. The latest Cleveland Cliffs. Cleveland Cliffs. What the heck is Cleveland Cliffs? Huh. Cleveland Clinic, right there. Cleveland Clinic. NASDAQ, Cleveland Cliffs, common stock, Cleveland. Cleveland Clinic. It's saying CLF is Cleveland Cliffs. I don't know, is that the same? Come on, why is it so difficult? Why doesn't somebody know this one? All right, too bad. I can't find it. Sorry, dude. Boss man, how's Clorox looking? ADD kicking. Yes, it is. I'm looking through Google right now. I can't seem to find anything. Yep, I can't either. All right, Arrow wants to take a look at Clorox. Let's go take a look at Clorox. CLX. CLX. I know Clorox. That's the top of my head. I know that one. All right. Clorox. High, low. Where was it? Where is it? What direction? Look at this. Down, up, down, up. Okay, currently you're at 165. Great. 165. We're looking at the 166s. 165. Nope, not for this week. Next week. Yep. Next week's 165 looks good. All right, so let's take a look. Uh-oh. Here we go. Clorox, or CLX, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up. Right now, here's where we are right now at 166.35. The 165s are going for 230. We lose $1.30. It's not going to work. Sorry. Sorry, Clorox is not working this week. CYH. Opinion on PSNY. What the heck is... Uh-oh. DVA wants to look at Pepsi. Hold on. Let's keep going back. Wow. Okay, here we go. All right. Big Dookie. UWMC. It's a non-profit and not traded. Well, there you go. Can't help you out if it's non-profit, not traded. Mehesh wants to take a look at FedEx. Cool beans. We'll take a look at that in a second. First, I need to say no to Big Dookie with the UWMC. UWMC. Okay. To 833. It has weekly options. Let's see how well they pay out their dividends. UWMC. Okay. Big Dookie, you ready? 2021, 2022, 2023. 3 years of dividends. Yeah, no. And look how often they increase. Never. Why the hell would I jump into something like that? Never increase the dividends. 3 years of... Yeah, no thank you. Sorry, dude. Mehesh. FedEx. FDX. FedEx I know has more than 20 years of dividends. That much I do know. Why would I buy FedEx? Because I know who they are. High, low, where was it? Where is it? Look at this movement. Down, up, down, up, down, up, down, up, down, up, down, up. Well, I really don't like it. Bank of America, BAC, we'll take a look at that in a second. Gap down. They call that a black swan. You got 1, 2, 3, 4. 4 black swans this year. Yeah, that makes me a little unhappy, a little queasy. All right, let's take a look. Currently 269 to 269s to 270s, 258. Okay, next week's 274. Ooh, I like next week's 270s. All right, that being said, a year ago, 265. Bottomed out the end of October last year at 223. The high was a couple of months ago. We have a double high at 313.57. That was in the middle of July. From there, she drops, retrace, drops, retrace. Look at this big drop. All right, let's go here. Oops, we need a little bit more space. Right there. All right, here's the last 30 days. Look at that, the last 30 days. 30 days ago, we're at 300. She drops down to 280, shoots back up to 308. Then a big gap down. Remember, now you guys, I may not have said this today, but if you don't take your profits, look, here's the bottom here, here's the top. If you don't take the profits, market maker is going to take it away from you. It happens all the time. Big, huge drop. It goes from 300 all the way down to 255. That's a $45 drop overnight. How would that make you feel? Well, for me, I'm a buyer. Okay? 2 days the upside, I jump in right there. Still good opportunity to jump in. I love it when it falls down. Mesh, that's a good call. Okay, so the 269.29, not this week's, it's close. Okay, the 270 this week is going from 258 to 265, the 267.50s, 395. Let's see what this one looks like for this week. We have 3 days left. See what it looks like. Now, like I said, I like the 267.50s. Let's see what it looks like. Let's get rid of this. I'm actually going to do a trade so you guys pay close attention. Okay, we're going to do a covered call, and we're going to do the 267.50s right there. Okay, so let's buy, let's just go 100 shares, or 200 shares, why not, 200, there we go, 200 at the market, there we go. Now, confirm and send. Here's what it sounds like. This is what a covered call trade sounds like. You ready? Going to buy 2 covered calls of FedEx for October 24. That is this coming Friday. It means I'm going to buy the stock first thing in the morning. Then I'm going to settle the covered call at the exact same time. The option is going to expire this coming Friday. Okay, if it's in the money, great. I'll be back into cash on Monday. If it's out of the money, which means if it's lower, okay, then I'll keep the stock and I'll do it again next week. So 267.50, the call on FedEx at the market to open to open. Okay, so we're having 2 trades. Buying the stock, selling the option. That's 2 trades. All right. The break even is 265.24. Well, it's currently at 269. Well, as long as he closes on Friday above 265.24, I'm making a profit. Exactly how much? Well, it depends. If it's above the 267.50, I'm making $452 on this one trade. So that's the amount I'm going to make on this. Let's get the calculator out. Calculator, 452, 452. I want to divide it by how much money I'm invested in 200 shares of FedEx. 53,049. Wow, that's a lot. Divide 53,049. That'll give me a grand total of 0.8. That's not 1%. Sorry, that's going to be a no. So we don't like that one. Let's get out of there. Let's get out of there. And let's look at next week's 267.50s. Okay, so next week, same thing, but we're selling next week's option. All right. Oh, wait a second. I got to change that. 200 shares. 200 shares. Okay, same amount of money. Too much outlay of cash. Milton, sorry about that, brother. All right. Next week's trade looks like this. Buy 2 covered call FedEx 11 October. That's next Friday. Not this Friday, next Friday. Okay? The 267.50 call, basically the exact same. But look, the break even, 263.54, almost the same. The maximum profit, 792. That's a nice profit. So, calculator, clear, 792 divided by the purchase price, 52,709. 52,709 gives a grand total of 1.5%. Okay, so it's 1.5% trade from this one. If you like FedEx and you have that kind of money. Okay, now I don't buy FedEx that often, but every once in a while I'll do when I see something like this. All right, let's get out of that, get out of that, get out of that, get out of this. Go back to here. All right, here we go. So I like the big drop, okay? Because now the stock is going to move back up again. Because look where your 30-day high is. It's at 308. Okay, we're currently at 269. But the question is, do I like FedEx? If you like FedEx, do the trade. You don't like FedEx, don't do the trade. It's an answer that only you can come up with. Okay, whatever. mRNA. mRNA. Okay, mRNA. High, low. High, low. Where was it? Where is it? Up, down. This is direction going down. Big drop here. Okay, so we're at 63.94. We'll be looking at the 64s. Look at that. The 64s, 142. That's over 2% for this week. There's only 3 days left. Wednesday, Thursday, Friday. It's over 2%. Well, hell, that works for me. Well, let's take a look at it. Okay, a year ago, we're at 103.17. Okay, topped out at 169.25, and that was back in the end of May. All right, so from the high of May at 270, now, sorry, 170, now we're at 64. Well, that's more than a 50% drop. From 170 to 60, that's $105 or $110, somewhere on there. That's a big drop. Okay, last 30 days. 30 days, 30 days. Here we go. All right, so here's your last 30 days. 30 days ago, we're at 78, drops to 72, shoots up to 80. Okay, double top at 80, drops all the way down here. Your bottom was on Thursday. Okay, take a look at the bottom on Thursday. Thursday's bottom was 63.37. Today's bottom, 63.41. Very close. Okay, so that being said, well, what am I going to want to do? Well, I'm going to want to wait for it to turn around and go back up again before I even think of buying it. So we'll put mRNA for next week. mRNA. Okay. Big brain. Win is killing it. I certainly hope not. I actually have some win. Win. W-Y-N-N. Shit. Up again today. mRNA, I want to squeeze that orange. Yeah, I wait to find the bottom first before I jumped into that one. But that's just me. What the hell do I know? So we're taking a look at Win. Okay, Win Resorts. High, low, where was it? Where is it? What direction? Down, up, down, up. Yeah, I'm going to stay away from this one for more acquisition. I actually own some of it. I own some at 87. You think I would be happy, but no. See, I bought it at 87, and now, a couple of weeks ago, I sold the 77s. So I'm losing huge on this one because I bought it here at 87. I sold the 77s down here, and look at this big jump. I'm waiting for this thing to turn around, and it doesn't look like it wants to. Okay, look at that. Sideways, and then shoots up. Well, I'm waiting for the damn thing to turn around and come back down again. Okay, until then, I will keep pushing it forward to keep from losing, because I don't want to lose. No matter what, I will push it forward, and I don't want to lose. Okay, Big Brain, Plains All American, really? PAA? All right, Plains All American. I think I bought this once or twice. Here's the high, here's the low, here's where it was, here's where it is. She shoots up, pulls back, that. Now she's going sideways. 1754. Great. 1750s? No. Next week, 1750s? No. Sorry, the premiums are absolutely horrible. Okay, at the money, it's 5 cents. Out of the money, 0.000. Yeah, no thank you. Okay, it's don't get me wrong, I bought it once, I made money on it, but the premiums are terrible. At the money, yeah, you might get your 1%. Out of the money, you get nothing. No thank you. Sorry, read the numbers. It's all a numbers game. If I'm buying something, I'm selling something, what's my rate of return? Am I holding it for a week? Great. I'm making my 1%. Wonderful. It's really not that difficult. DVA, how are you today? You want to take a look at Pepsi? Pepsi? Oh, Pepsi is another one of those companies that's 100 years old. I can't really see Pepsi as going out of business, but that's me. What the hell do I know? Okay, Henry Robinhood stock doesn't have enough dividends. Sorry. Okay, so let's try this. Taking a look at Pepsi. Here we go. Pepsi. Here's the high back in May. The low back last October. Okay, she shoots up, pulls back, goes up again. Now here's a pullback here. I want to take a close look at what's happening in the last couple of weeks. But before we do that, let's check the numbers. 171.838. Well, the 170s are going for 209. Okay, I'd be losing, too much. That's not going to work. 172, that's not going to work. That's for this week. There's only 3 days left. So let's go to next week. Because next week we have more time value. The 170, 375. Okay, that'll work. The 172.50, 241. Well, that will work also. So they'll both work. So let's take a look at the chart and what is the chart telling us. Okay. A year ago, we're at 169.03. Our bottom was back in the beginning of October at 156.27. Now, it took a couple of months to hit the high of the year, and the high of the year just so happens to be in the middle of May, and that was 183.29. Well, you got your profit taken, brought us back down to 157. Our last 30 days. Okay, 30 days ago, we opened up at 172.06. A couple of days later, here's our top at 179.73. From there, Thursday. Last Thursday, 3 days ago, is the 30-day bottom. Now, I love a 30-day bottom coming off of a 30-day high. 30-day high, 30-day bottom. Now we're jumping to the upside. This is what I like. I like the 30-day bottom. 1, 2, 3 days to the upside. That is a, what do they call that? A gold carpet, a red carpet invitation? Well, here we go. If I'm buying it at the price, it's at 171.38, I sell it to somebody else at 172, I can get 241. Well, 241 is way over 1%. Okay, even the 170s, 375, that's way over 1% also. So for the fun of it, let's just do a quick covered call trade, and you'll see how it looks and how it sounds. Okay, so I like the 170s. Yeah, let's do the 170s. All right, get this out of the way. First thing I want to do is I want to change this to it says covered call. And I like the 170s for next week. Okay, here we go. Now, I want to do it at a market order, because when you're doing a market order, the stock and the options are tied together. So my profit is already there. I already know what the profit's going to be. So for the fun of it, let's look at 1,000 shares. Okay, if you can't do 1,000 shares, do 100, do 200, do 300, whatever fits your budget. So let's see what the numbers look like. Here's what the trade sounds like. By 10, let me go over this side. By 10 covered calls on Pepsi. 100, those are the weeklies. 11 October 24. That means it expires next Friday. I buy the stock, I own the stock. The option that I am selling is going to expire 4 o'clock next Friday. Okay, the 170 call against the stock Pepsi at the market to open. The break even is 167.55. Well, it's currently at 171. So as long as the stock closes next Friday above 167.55, well, I'm going to make a profit. Okay, now 10 contracts, 1,000 shares. It might be a little steep for you. Yep, that's going to be steep for a lot of people. So let's change it, because it's looking like it's a $167,000 trade. I don't think many of you out there have $167,000. So let's just go to 200 shares. All right, 200 shares might be easier. Okay, buy 2 covered calls makes it a little easier. My maximum profit is going to be $489. 200 shares is going to give me a $489 profit. Okay, so remember where I said I like to be safe, consistent, and predictable? Well, this is telling me exactly what my trade is going to give me before I even do it. Well, that's kind of predictable. All right, so clear this out. 489 is the profit right there. Maximum profit 489. Cost of the trade 33,512. Okay, so I divide it by the cost of the trade 33,512, and that gives me a rate of return of 1.45%. Well, we're looking for a safe, predictable 1%. Pepsi's been in business for over 100 years. They consistently increase their dividends. Okay, the odds and probabilities are in my favor. If I buy a stock, sell the option, 80% of all options expire worthless. Why do I want to be a buyer of options? It's going to expire worthless. Why? I'd rather it be in my favor. As a seller of options, it's an 80% chance of being profitable. Okay, number one, the company's over 100 years old. I get no problems with that. Also, it is a dividend king. What does that mean? That means they've increased their dividends every single year for 5 decades. 5 decades. That's 50 consecutive years of increased dividends. So why the hell wouldn't I want to buy it? Great, I'll buy it, get the dividend, I'll get the premium, the 1.45%, which is a little bit less than 1.5. Great, not a problem. Now that is at the what price? The 170. So let's move the strike price 1 strike and see what the rate of return is then. Okay, so the 170s, so let's go to the 172.50s. 172.50, 200 shares. Okay, hypothetically speaking, it should be the exact same amount of money, except for the profit will be different. Okay? Sell 2 covered calls of Pepsi. Those are the weeklies. No, wait, we don't want for October. We want 11. It's got apples to apples. The 172.50 for next week. Yep, here it is right here. 172.50 for next week. Yep, that looks better. 200 shares. Okay, 200 shares at the market. Okay, and here it is. Buy 2 covered Pepsis. 100s, those are the weeklies. 11 October 24. That's next Friday. Okay? The 172 call option against the Pepsi stock. So I'm buying the Pepsi stock. I'm selling the stock option against it. That's called a covered call, one of the safest trading strategies there is. Now, the profit, the break even is 168.92. So as long as she's above 168.92 by next Friday, I'm going to be in a profit. It's currently at 171.38. So what does the stock have to do? Stay the same, not move at all, go up, great. Stocks move 3 ways. Up, cool, I win. Stay the same, cool, I win. Go down a little bit, I still win. So all 3 are in my favor. If it goes up, I make my money. If it stays the exact same, doesn't move at all, I make my money. She can even come down a little bit, and I'm still making my money. Okay. Anyway, here's the profit, 715. Okay, great. Well, let's pull this up. Okay, 715 is the profit on this particular trade. Remember, we're only doing 200 shares, 2 contracts. I'm going to divide it by how much money I'm investing. Well, this investment is 33,786. 33,786. Okay, that gives me a grand total of 2.1%. Okay, 2.1%, fine. So here's the things you need to think of and keep in mind. Number 1, well, it's Pepsi. Pepsi's been around for 100 years. If you're not okay with buy a company that's been around for 100 years, I really can't help you out. Seriously. I mean, think about it. It's 100 years old. Okay, they must be doing something right if they keep increasing their dividends for more than 5 decades. Do I care how much the dividend increases? Nope. All I care is that they're consistently profitable and their profits are increasing every year. That's my only concern. Okay, so if I buy 200 shares and I sell the 200 shares for almost the exact same price I paid for it, collect that premium, and that's $715. Now, is my money safe in a 100-year-old company? Well, I think so. Okay, I wouldn't buy a company unless I felt good about it. Number 1, it's got to make sense. Well, I know what Pepsi does. Okay, 2, they're over 100 years old. 3, dividend king, consistently increasing their dividends for more than 5 decades. That works for me. Anyway, hopefully that made sense to you guys. Because that's the main thing you have to keep in mind. Does it make sense? What the hell did I just do? I just hit a button. Wrong button. Anyway. Okay, user 3810. You want to take a look at Cleveland Cliffs. What the hell for? I don't know. Oops, I didn't want to save that. Damn. Damn. All right, let's get out of this. Let's get out of that. Let's slide this all the way over there. Cleveland Cliffs, huh? CLF. All right, so here's CLF. Okay, first thing I want to see, high, a low, where was it, where is it, what direction is it currently going? It's bouncing off that bottom right there, check it out. She goes up, it's the high, drops, here's the bottom, now she's bouncing up, she's at $12.99 at this moment in time. Before I do that, let's see how consistent they are with their dividend increases. Because that's one of the main things for me. And that's me. You guys got to figure out what works for you. I don't want to invest my money into a company unless I know for a fact that they're consistently profitable. I do not want to go backwards. I do not want to put my money into a company that's not consistently profitable. But that's just me. What the hell do I know? You guys got to figure out what works for you. All right, CLF. Sorry, dude. There are no dividends in the time frame selected. Okay, CLF is a no. Sorry. Robinhood stocks does not have 20 years of increased dividends. My opinion on PSNY, never heard of it. More than likely, it's going to be a no. You ready for it? PFNY. Can we all say it all the same time? No, can't even find it. Can't even find the stock symbol. So why the hell are we looking at it? CTRA. Are you serious? CTRA. Okay, CTRA. Contera Energy. Okay, high, low. Where was it? Where is it? What direction? She's bouncing off of that. CTRA. CTRA. How are they with their dividends? Okay, take a look. Oh, look at that. All the way to 2020. 4 years? Really? It's got to be more than that. Yes, and it is. Uh-oh. Okay, 2020, 19, 18, 17, 16, 15, 14, 13, 12, 11, 10. Cool beans. Look at this. Oh, wait a second. Hold on. 2005. Now, that's crappy. All right. They first started paying dividends in 2005. All right, user 3810, blah, 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 whatever. Here you go. CTRA. 2005, they pay a 1 cent dividend. Doesn't send chills up my spine. Okay, not too thrilled about it. 2005, 1 cent. 2006, 1 cent. 2007, 1 cent. 2008, 1 cent. 2009, 1 cent. 2010, 1 cent. 2011, 1 cent. 2012, 1 cent. Why do you like this? Milton, you have a great night. We'll see you again another night, hopefully, maybe, kind of, sort of. I don't know. Okay, so I'm going to say no to CTRA. Okay, what is that? Like 10 years, no increase whatsoever. Why would anybody want to invest into that? If they're not increasing their dividends, why? Okay, we already looked at Cliffs. PSNY. What the heck is PSNY? PSNY. Polestar Automotive Holding UK. Yeah, no. Sorry, dude. There are no dividends in the selected time period. Okay, so if there are no dividend, how do I tell when it's going to move? See, I know that dividend stocks, at least good stocks that I look at, I know that they move before the dividend. If it has no dividend at all, how do I find out if it's going to move or not? Where's the consistency there? Well, there isn't any. So why would I want to look at it? CYH. What the heck is CYH? CYH. Community health system. One dividend in 2012? Yeah, no, sorry. Come on, man. Okay, dude, I don't know what you want me to tell you. Okay, user 381106, whatever. I have no idea what you mean by that. What did you give me to take a look at? Yeah, Cleveland Cliffs. Yeah, we looked at that. It's a no, and I'm sorry you don't like the word no. Yeah, CLF, no dividends. Thank you. Nike, we already looked at Nike. Earnings negative. Yeah, that's a no. Like, that's going to change my mind, negative earnings. How about JP Morgan for next week? 86. These vice presidents are lacking. Hassan Pfeffer, I'm not quite sure what you mean, but if you're talking about our vice presidents, yeah. Our candidates, yeah. The current one, yeah, I'm going to agree with you. EPD. EPD. Who came up with EPD? Okay, enterprise pods. Okay. EPD. Interesting. Interesting. Look at it, all the way down to 1998. EPD. All right, so EPD. 11, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41. Wow, they increase every single year. Nice. Nice. Keeps going. Yeah. So EPD consistently increases their dividends. Great. If you have no intention in collecting the dividends, why do you emphasize aristocrats and kings? Well, user 38106, terribly sorry you don't like my way of doing things. Okay, here's why. Now, see if you can follow me along, and I'm going to speak very slowly, and I'm going to enunciate as best as I can. All right? There are two different kinds of companies in the stock market at this moment. 9,664 companies the last time we checked. 9,646 or 64. I don't know, something like that. Over 9,600 companies. Now, there's only two types. Type 1, they can take all their profits and put it back into the company for capital growth. If that's what you're looking for, you are in the wrong place. The second company, they take their profits and they share them with their investors. That is you and me. Once we buy and sell the stocks, we become investors, we become part owners. We are entitled to a portion of the profits. So, Dividend Kings, 50 years of increased dividends. So, logic, reason, common sense tells me if the dividend consistently increases year after year after year after year, they're consistently profitable because you cannot increase your profits to the shareholders if you're not consistently profitable. It just doesn't make sense. So if the aristocrats, the kings, the champions, and the contenders all increase their dividends for more than 20 consecutive years, that's 300 companies that are consistently profitable. That's not a whole lot when you take a look at 9,664 companies. 300 is not a lot. What is that, 2%, maybe 3% of the whole stock market? Those are the only ones I want to put my money in. You can put your money anywhere you want. You want my opinion? I give you my opinion. You don't like my opinion? I really can't help you out. I'm not going to put my money into something, I'm not going to give my money to someone who's not running the company efficiently, in my opinion. Efficiently means profitable every single year. Not profitable one year, not profitable the next. No, that doesn't work for me. Okay, there's 300 that do work for me. So why would I want to put money into a company that's not consistently profitable? I will wait until you come up with a really good answer. No comment? You put your money wherever you want. I like to put my money consistently profitable companies. Point blank. You put your money wherever you want. All right? EPD. All right, we're looking at EPD. Here's the high, here's the low, here's where it was, here's where it is. This is the direction it's going. It's currently at 29.31. The 29.44 is the current price that I can buy it for first thing tomorrow morning. The closest strike price is going to be the 29.50. It is not paying 1%. EPD is going to be a no. Sorry, Matt. Matt, you also want to look at Duke Energy, DUK? DUK. Sorry, brother. DUK is a monthly optional stock. I don't like monthlies. That means I can only write a covered call once a month, 12 times a year. Doesn't work. Now, I didn't go to college. I admit that freely, but I do know that 52 is better than 12. Okay? 86, you want to take a look at J.P. Morgan, huh? J.P. Morgan. J.P. Morgan. All right, J.P. Morgan. The high, the low, where was it, where is it, what direction it's going? Plain to see. We all know who J.P. Morgan is. 206.92. Okay, so 86, I don't know if you saw this, but you ready? Take a quick look. The last traded price, 207.04. The bid, 206.80. The ask, 206.92. The market maker is going to push this down tomorrow. Just want to let you know that ahead of time. So currently, here's our high right here at 226. She drops down to 202, back up. Now she's coming down. JP Morgan's going to look very pretty in 2 weeks. Not going to look so good this week. Sorry. But I am going to write down for next week. Not next week, but 2 weeks from now. JP Morgan. So 86. In 2 weeks, we'll take a look at JP Morgan. So user 38106. I hope that makes sense. Hassan Pfeffer. Bristol Myers Squibb, huh? BMY, Bristol Myers Squibb. Ooh, interesting. It's going to be a no. Sorry. Let's take a look and I'll tell you why. High, low, where was it? Where is it? What direction? It's going down. It's bouncing up. It's going to the upside. Great. Well, where is it right now? It's at a 30-day high. I don't like buying high and waiting for it to go higher. It just doesn't make sense to me. Okay? Matt, Duke doesn't have weekly options. It's going to be a no. Thank you there, 86. So, Bristol Myers Squibb, BMY. I think we wrote that down for 2 weeks. BMY, BMY, BMY. Nope, I'm going to write it down now. BMY, Bristol Myers Squibb. Okay, Thinkorswim, best trading platform, hands down. Thank you, Hassan Pfeffer, 86. Because that narrows down to qualifying companies, thank you, and consistent increased dividends. Thank you, 86. I couldn't have said any better. As a matter of fact, I think that is what I did say. Rick, problem with dividends is a dip in the stock cuts out years of dividend profits. Rick, I'm not 100% sure what you're saying. Because I've been investing for over 20 years, the last 15 years using this strategy specifically. Okay, so just for the fun of it, Rick, let's take a look at a few things. Okay, so let's get rid of this. Let's go to here. Okay, now, September, yeah, I think September's a good time to look. We are in October 1st. Okay, so let's take a look at General Electric. Okay, Rick, you ready this? General Electric right here on the 26th. That's the dividend date on the 26th. Now, I say I like to buy it 2 weeks before the dividend date. That would be the week of the 9th, 10th, 11th, and 12th. I like to buy on a Monday, 2 weeks on a Monday. So let's take a look at General Electric on the 9th. Now, it already passed, so we know what it's going to look for. General Electric on the 9th to the 26th. General Electric, the 9th through the 26th. Okay, now, I'm not a rocket scientist, Rick. However, the 9th, right here, the 26th, right here. Explain to me what direction that is. When I say stocks have a tendency to go up just before the dividend date, The dividend date is the 26th, right here. See, look, see that little dot right there? It says 28 cents. That's the dividend. Here it is. The stock has a tendency to go down on the dividend date, which is exactly what it did. But if I'm buying it 2 weeks before the dividend date on a Monday, well, that's the 9th. Here's the 9th, and it goes up. Shall we look at another one? Let's look at another one, just for the fun of it. Okay. MDT, Medtronics. MDT, we'll be looking on the 9th again. Medtronics, MDT, MDT. MDT. Okay. The 9th, the 9th, the 9th, the 9th. Here's the 9th right here. Okay, so here's the 9th right here. The opening of the day. Let's go back for 1 second. Right here, Medtronics has a dividend of 70 cents. Okay, here's the 9th right here. 70-cent dividend, okay? 70-cent dividend, buying it on a Monday 2 weeks before. The opening price, $90. The high of the day, 91.15. The very next day, still 91.12. Okay, still high enough to capture that dividend. The dividend 70 cents. Well, if the opening is at 90 and the high is at 92, well, the 70 cents is already in there. So I'm not quite sure what you mean. Anyway, let's go back to where we were. You can take a look at all the stocks. Take a look at the stocks 2 weeks before the EX date on a Monday. I like buying on a Monday 2 weeks before the date. It has a tendency to go up in value. Why isn't my phone charging? My phone's not charging. Damn it. Damn it, damn it, damn it. All right. Haas and Pfeffer, as you see on current platform currently. That is if you use the current platform currently. Okay, got it. Earnings negative. Yep. Nike, we already looked at Nike. CLF, no dividends. Great job, 90 minutes. I know you only do weekly options, but what about a monthly with only 1 week left? If you're wrong, you got to wait 5 weeks. Yeah, no thanks. I don't like monthlies, and the numbers never work out. I was on with you the other night. Did you end up buying Apache? No, I didn't. How about Ford? Yep, I bought Ford. VLO, DVA, how are you today? Valero Energy, huh? Okay, Valero Energy. James, with these stocks, please start selling these teas. All right. I'll see what I can do. There's a lot of things I should be doing that I'm not doing, and you know, it is what it is. All right, VLO, Valero Energy. VLO, Valero Energy. Okay, high, low, where was it? Where is it? What direction is it going? Currently at 140. The 140s, worthless. And okay, next week's 140s. 140s for next week, 195. Well, that works. Currently 137. Cool. Ooh, here's another tip. Remember the tip I gave you a little while ago? Go to this side. The last trade, 137.47. The bid, 137.50. That's higher. The ask, 140. That's higher. When both the bid and the ask are higher, the market maker is going to push it up tomorrow. So we know the market maker is going to push this up tomorrow. So let's take a look at the numbers. A year ago, we're right around 136. We bottomed out at 120. That was in October and November of last year. Here's the top right here. The beginning of April, 184.91. Drops all the way down. Here's the bottom right there on the 11th. Yeah, this one, the chart is really not clear. Okay, 30-day high, 137. Drops down to 130. Up, down, up, down, up. There's no real direction here. But the market maker is going to push it up tomorrow. So the question you need to ask yourself, wait a minute, before we do that, let's take a look at the seasonality. What does it normally do this time of year? Okay, normally this time of year, flat, just going sideways with a very slight tilt to the upside. See it? Very slight tilt to the upside. Not huge, but enough to keep it steady and moving up. All right, there we go. All righty, we're at 11 o'clock. We got a half hour left to go. Now, Israel, we already looked at Apple. Okay, Zalord, Spartanox. Zalord, is that right? Zalord, Spartanox? Ford. Okay, let's take a look at Ford. I like Ford. I actually have some Ford. Okay, first we want to see high, low. Where was it? Where is it? What direction? Down, up, down, up, down, up. So we're going to a little bit on the upside. It's at 1075 at the moment. The options look like this: 1073, the 1050s, 30 cents. Nope. Wait a minute. Yeah, the 1050s, we lose 23 cents. Take 23 cents off of this. That would be 17 cents we got left. That's more than 1% for this week. Next week, even more. Nice. It's over 3% for next week. All right. So look at the numbers. A year ago, 1232. Top of the year, that was 1486. And that was the middle of July. Had a big drop, kept on going. Here's the bottom of the year right here. The bottom of the year was in the beginning of August, and that was 949. Look at the movement. The bottom of the year, up, down, up, down, up, down, up. Okay, right now it's at 1075. Now the book value for Ford is over $14. I like Ford. I love buying a company when the stock price is less than the book value. All right, so currently the last 30 days, here's what the last 30 days look like. Down, up, down, up. Okay, well, she's going to the upside. Simple. So if I like the 1073s, I like this week's 1050s, let's do another trade. Why not? So you guys get a better feel for what it looks like. All right, so Ford, covered call. We like the 1050s right there. That don't look right. 1,000 shares, $80. Yeah, that's not going to be enough. Okay, we divide that. Clear. $80 divided by 10 grand. No, that ain't going to work. 426. Yeah, that's not going to work. All right, so that's a no. Let's go for the 11s. Okay, the 11s, 320. Yep, that makes more sense, the 11s. Okay, so if we buy it at the current market, we sell it at 11, bring in 320. Okay, divide that by the same number, 10,685, is that right? 10, yep, 686. And that's going to equal 2.99%. But here's the thing, all right? There's one little catch. Okay, if we sell the 11s, the stock has to move up. 27 cents. Well, that's a big jump. Okay, do you think it's going to get there by the end of? We're going to have to do next week's. Okay, because this week is not. That's not enough time for that thing to move that much. Okay, so right now, the 10. Let's get out of this. Okay, right now, this week's 11, okay, a stock has to go up 26 cents in 3 days. Well, 26 cents doesn't sound like a lot, but when the stock is only $7, 26 cents is about 30%. That's a big jump on a $7 stock, a $10 stock, sorry. So let's look at next week's 1050. So next week's 1050, here we go. Okay, let's see what it looks like. 190 off of 10,000. Okay, so clear that. 190 bucks is the profit. See right here. Maximum profit 190. Cost of trade 10,316. Divide that by 10,316, and that gives me a trade of 1.8%. That makes more sense to me. Okay. Yeah, I like Ford. I actually own some Ford. Let's get rid of this. Let's go back to that. Let's go back to this. All right, now we're back where we started again. All right, we already looked at Ford. We already looked at Apple, TOU. I have no idea what TOU is. And usually, when I say I have no idea what it is, it's usually going to be a no. And it is a no. Doesn't pull up. Ooh. Now here you go. 3810668. I'm going to call you Steve. Steve wants to take a look at Wells Fargo. WFC. Okay. Let's go this way. High, low, where was it? Where is it? What direction is it going? Okay, so it's going to the upside. It's at 55.39. The 55.50, the 55.45, 55 is going for 93. That's your 1%. Next week's is going for 172. That's a better deal right there. Okay, next week at 55 is a better deal than this week's 55. So even though this week's 55 will give you 1%, but next week will give you 2%. And you have more time for the stock to move up. Okay, so a year ago, Wells Fargo was sitting at $40.14. The bottom was in the middle of October. Paul, hold on a second. Okay, Paul. If the trade makes more sense 2 weeks out, how are you pulling in 1% this week when the better value in some of these are for 2 weeks? Well, here you go. Paul, today's Tuesday, which means tomorrow is Wednesday. That gives us 3 days. Okay? 3 days left. Very challenging to get 1% for 3 days. Because remember, I do my trading on a Monday, because Monday you have 5 days of time value. Monday, Tuesday, Wednesday, Thursday, Friday. So on Tuesday, you have 4 days of time value. You just lost 20%. Wednesday, you have 60% of time value. You just lost 40%. Okay? As the time ticks away, you lose time value. As the time value disappears, the value of the option decreases. It's just plain simple math. Right? So, yes, it looks better for next week, but if you take a look at what the premium is for next week, well, that's more than 2%. Well, that's 1% for this week and 1% for next week. 2%. Okay? It's all about the math. All the numbers work. All right, so let's finish up with WFC. There's our bottom right there. Now we topped out. The high of the year was 62.58, and that was in the middle. The middle of May. Okay. Look at the movement. Down, up, down, up, down, up, down. Unfortunately, sorry, Steve, it looks like Wells Fargo is coming down. Okay, is it a good deal? Maybe it is, maybe it isn't. I don't like buying in a downtrend. Now, you can if you want, okay? Because there's a couple questions you always got to ask yourself. Number one, does it make sense? Number two, do I like Wells Fargo? Number three, do I like Wells Fargo at this current price, even though the price looks like it should be coming down? It's a very important question to think of. Okay, Hassan Pfeffer, you like EPD? Now, Wells Fargo, I'm going to write it down. We'll take a look at it again in 2 weeks. Now, the funny thing is, when I say I'm going to look at it in 2 weeks, okay, I write it down in my little book. Because see, the ones we looked at this week, I looked at those 2 weeks ago, and we traded how many of them? Out of about 20, we traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So out of about 20 that we said, well, we'll take a look at it in 2 weeks. Out of all of them, well, these are the ones that we liked. Okay, so next week, these are the ones that are for consideration for next week. So over the weekend, we're going to take a look at those and see which ones actually are good for next week. And then 2 weeks out, well, we have this list starting. So every time I say, oh great, that looks good for 2 weeks from today, because here's the point. Let's go to the 30 days. Get a little closer. Okay, here's the 30 days. Okay, let's even open it up even more so you get a really good look at it. Okay, 30 days ago, we're at 58. She shoots up to 59, drops down to 50, shoots back up to 56, drops down to 53, back up to 57. Now she's coming down again. So I don't like buying in a downtrend. Okay, Sin, we already looked at AT&T. 86, we already looked at JP Morgan. TOU, we looked at it and it's a big fat no. Okay, Sin, we already looked at AT&T. Sorry. Hassan Pfeffer, Valero Energy. Dividends unsure. Hold on. Valero Energy, VLO. Didn't we take a look at Valero Energy? Yeah, we did. We said we couldn't figure out which direction it was going. Look. I mean, can you figure out where it's going? Look. Down, up, down, up, down, up, down. Yeah, it makes no sense. So what does it normally do this time of year? Normally this time of year, Valero Energy just goes sideways, okay? Just doesn't go anywhere this time of year. All right, and what do the dividends look like for Valero Energy? Hold on. Let's go here. VLO, Valero Energy. Yeah, I remember this one. 2000, it was 2 cents, 3, 4, 5, 7, 11, 14. And right there in 2009, they decreased their dividends to 5. And from 2009, from 5, it went to 14, 16, 20, 23. And then from there, it totally went up. So I like VLO, but it's a certain awkwardness to it. Peace, Chevron, huh? Let's take a look at Chevron. CVX. Chevron. Okay, high, low, where was it, where is it, what direction is it going? Currently at 150.48. The 150s for this week doesn't work. The 150s for next week works out very nicely. All right, Avery, Coca-Cola, we already looked at it. The numbers just don't look good. Sorry. Is your trading based on correlated between stock prices and dividends? No. My trading is, yeah, I suppose you could say that. I look for when the dividend is, because just before the dividend, the stock has a tendency to go up in value. So I use the dividend as a precursor or an indicator. So once I see the indicator or the dividend, well, that's when I want to buy it, 2 weeks before the dividend. And then I want to do a covered call, which is one of the safest trading strategies there is. Can you look at Apache and explain why you didn't buy? Most likely the reason I didn't buy, I probably ran out of money because I could only buy so much. That's it. All right, it's 11:13. We're below 55. And once we get below 55, I like to reboot. But we got 15 minutes left, so it doesn't really make any sense. So let's finish up and see what we can do. Okay, so we're on CVX. Okay, so we're looking at Chevron. Okay, the high, the low, where was it? Where is it? What direction is it currently going? Is it down, up, down? Now she's going up. He's at 150. So 150 looks good for next week, not this week. Okay, so that being said, let's take a quick look at the numbers. A year ago, Chevron was at 167. The top was 169.78. And that was the beginning of November. She drops, shoots up. Here's a bottom right here. Now, look at this. Okay, down, up, down, up, down, up. It's currently at a new 30-day high. I don't like 30-day highs, and I do like Chevron. So I'm going to put Chevron down for 2 weeks, CVX. So we'll take a look at Chevron in 2 weeks. Sorry, who wanted to look at Chevron? Sorry, Peace, look where it is. Okay, it's at a 30-day high. I don't like buying at a high. I like Chevron, don't get me wrong. I will wait a couple of weeks for the profits to be taken. Because when the stock goes up, you get people like me. Take profits. Well, what happened? Take profits, the stock goes down. Okay, great. I'll wait in 2 weeks. When it drops, I'll take a look at it. All right, Nick wants to take a look at Bank of America, BAC. Now we'll look at 2 more, Bank of America, and then we'll take a look at Apache and explain to Funky Cold why I didn't buy Apache. All right, Bank of America. High, low. Where was it? Where is it? What direction is it going? It's at 39.22. Now that don't look good. Okay, this is the third tip of the day. You ready? 39.22 is the last trade. 39.05 lower. $39.17, lower. Market maker's going to push this baby down tomorrow. So why we bother looking at it? Last 30 days. Okay, last 30 days. 30 days ago, we're at 40 bucks. We dropped down to 38, which is the bottom of the year, bottom of the 30-day period. Okay, Ran Wang, I don't do gold. There's no way possible you can get weekly cash flow from gold. Sorry, it's a storage of wealth, not a cash flow of wealth. Sorry. Okay, so 30-day bottom shoots up to the 30-day high at 41, comes back down, shoots up, comes back down. The market maker is pushing it down for tomorrow. It's going to be a no. So now, let's take a look. You're trading based on correlation between prices and dividends. Kinda. I don't understand that one at all, dude. Terribly sorry. Apache. A-P-A. Okay. Apache. Here's the high way over here. Here's the bottom way over here. This is where it was. This is where it is. This is the direction that it's going. Ovens? No. All right. So it's bouncing off the bottom here. And we're currently... Oh, here we go. Tip number 4. You ready? Check this out. The last trade, 25.66. The bid, 25.77. Higher. The ask, 25.90. Higher. So the market maker is going to push this up tomorrow. Cool. Well, 25.90, the closest one's going to be 26. Look, we can get 1% on Apache for this week. Cool beans. For next week, well, we can get more than 2%. Awesome. Let's take a look at the numbers and see if it makes sense. All right, a year ago, 40.46. We topped out in the middle of October of last year, 43.53, and then she just falls. Look at the last 90 days. Okay, up, down, up, down, up, down, up, down, up, down, up, down, up. So she's going to the upside. All right. And there's the reason why I didn't buy it. Imagine that. Okay, so last 30 days. Here we go. Last 30 days. Here we go. 30 days ago today. All right, and this hypothetically, funky cold, this should give you your answer. Are you ready? 30 days ago, we're at 29. We dropped all the way down to 22.60. Shoot back up to 26, drop down to 23. That was Thursday. Friday was an up day. I like 2 days to the upside. 2 days to the upside. So Friday's day number 1. Monday was not an up day. That's why I didn't buy Apache on Monday. I invested all my money into other stocks. So now, Tuesday, I don't have any money to invest today. So today was an up day. Monday was not. Monday was a down day. Okay, I like 2 days to the upside. Friday, today, which means it's a perfect opportunity to jump in tomorrow. Okay, the market maker is pushing it up tomorrow. Now, it's not a tip. It's not a recommendation. It's just an observation. Okay, 30-day high, 30-day bottom, shoots up, pulls back. Now she's going to the upside. Currently at 25.90. If I buy it at 25.90, sell off to 26 for next week, I can get 61 cents a share, and that is more than 2% for the week, for the remainder of this week and next week. Oh, that's okay. I bought Apache for both of us. I'll let you know how we did in 2 weeks. Funky cold. Way to go, brother. Good for you. Now, like I said, Monday wasn't an up day. That's why I didn't buy it on Monday. Okay? All right, we got 10 minutes left. Avery, let's take a look at Coca-Cola, and I'll let you know why I don't like Coca-Cola, okay? Here we go, Coca-Cola. High, low, where was it, where is it, what direction is it going? It's currently at 71.71, okay? So the 72s for this week, 34 cents. That's 0.5%. No, thank you. The 72s for next week, 69 cents. Not quite 1%. No, thanks. You'll see there's a few companies that are over 100 years old. The premiums just really aren't that great. Okay? Now, I don't think there's any more. That's it. We're done with questions. So let's take a look at some of the stocks on my list. So you guys are all done with yours. Now I'm going to my list. Here we go. Albemarle. Top of the list. ALB. Okay, Albemarle a year ago we're at 177. The bottom at 72. We're currently at 94. Look at that. Up, down, up. Now she's coming back down. I actually have Albemarle at 90. It's at 94. I pushed it out to the 11th so I can hold on to it a little bit longer and continue that cash flow rolling for me. Okay, but it doesn't look like it's a buy for today, for this week, because she's coming to the downside. Thank you for explaining your strategy to us. I'm looking into a similar strategy for long-term hold. Okay, Avery, my idea of a long-term hold is 30 days. The longest I've ever held anything was 9 months, and that was Kimberly-Clark last year. Didn't do it because I wanted to. I bought it, the stock dropped. It took about 9 months for it to recover and for me to make a profit off of it. Okay? That's Albemarle. That's no. CAH. Cardinal Health. CAH. Okay, Cardinal Health. Take a look. Low, high. Where was it? Where is it? What direction? Look at this. Up, down, up, down. Now she's going back up again. 110.33. Okay, that's about right. The 111s. 1%. Not this week, but next week. Okay, great. That looks good to me. Last 30 days. Now that's pretty plain to see. Okay, 30 days ago, up, down, up, down, up, down, up, down, up. Well, looks like she could be coming down. I don't know. It would work for me because I'm currently in a position where I want it to come down. All right. Next on the list. CTAS. Who came up with CTAS? CTAS. Oh, hell no. It's a monthly. That's a no. Coles. We haven't. Why doesn't anybody want to take a look at Coles tonight? CSS. KSS. Coles. All right. Now I do own some Coles. Okay. High, a low. Where was it? Where is it? What direction? Bouncing off that. 271. Okay. So the 21s for next week. 60 cents. That's almost 3%. For this week, it's over 1%. Well, cool. We could still do Coles this week. Last 30 days, yeah, nope. Did you like that one? Yeah, nope. Reason being, here we go. Look. 30 days ago, 1950, jumps up to 21, drops to 18, shoots up to 21.25, now she's coming down. Okay, I like the fact that it's coming down. I'm into it at 23.23. Okay? Now, I have no intention on selling it. It works for me very nicely. All right. Let's take a look at Pfizer. PFE. PFE. Here we go. Pfizer. Okay, Pfizer. The high, the low, where was it? Where is it? What direction? Okay, it's definitely going to the upsides at 28.67. Okay, 29s for this week. Nope. 29s for next week. Yeah, barely. But take a look at the last 30 days. It's going to be a no. Okay, however, take a look. Down, up, down, up, down. So it's going to come down a little bit more before she turns around and goes back up again. I want to put Pfizer down for next week. I think it is written down for next week. No, it's not. Well, it is now. PFE. Pfizer. Okay. Comcast. Ooh, I love Comcast. The reason why I love Comcast, Comcast has over 64, I'm going to repeat it slow, 64 million customers paying every single month. How can you go wrong with that? Anyway, Comcast, CMCSA. CMCSA, try it again. Here we go. All right, a year ago, 44.37. We topped out at 47. bottomed out at 36. Look at where we are now. It's definitely going to be a no. Only because here's the last 30 days. 30 days ago, 39.50, we dropped to 38, shoot up to 42, now we're pulling back. Great, I'm gonna put Comcast down for 2 weeks, take a look at it in 2 weeks. It should be just fine. Okay, CMCSA, CMCSA. Okay, next on the list, CC, this is Hollywood's favorite, CC, which is Chemours. Okay, well, Chemours looks like it's going to be a no, but let's keep on going. The high, the low, where was it, where is it, what direction? She drops, shoots back up, 1971, 1932, 2004. Okay, great. So the 20s for next week, 45 cents, that's 2%. The 20s for this week, 1%. So we can get 1% for this week and 2% for next week. I'd rather do this week's, get that 1%, and then think about doing it again next week. All right, so a year ago, 27.83, we got a nice top at 32.70. That was in December. From there, she drops. Look at the last 30 days. Okay, here's the last 30 days. Okay, 30 days ago, we're at 19.50. We dropped all the way down to 16, shoot up to 21. Now we have 3 days to the downside. This baby's coming down. This is going to be a no. We'll look at CC in 2 weeks. Okay, 2 weeks sounds good to me. Now, we're just about at 11:30. 11:30, I'm going to call it a night. Getting a little bit tired. Our volume is a little bit low. Hopefully you guys had a great night. Hopefully you learned something. Hopefully we'll see you again tomorrow. For those of you guys in the morning trading group, we will see you first thing in the morning. All right, that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Darbenly, you're way over there now. Okay. And over here, and here, and here. Okay, you guys done. Thank you for your help. You're welcome. Have a nice night. We'll see you again tomorrow. Tom, have a nice evening. See you tomorrow, Tom.